We are not even a week into 2026 and we already have a sudden change event, and people are asking whether or not it makes sense to invest in oil stocks. And look, I get it. I understand, because today, as I'm recording this on January 5th, oil stocks are doing quite well. I think Chevron was already up 5% by itself, and this could be a way to start the year off right in terms of returns. However, you also don't want to jump into the year by making a major mistake and end up in a month or two losing tons of money. So here's what you really need to know about jumping into any event like this, but also especially oil stocks, because oil stocks are a bit different than most things that you could be investing in. Let's go ahead and break it down. The first thing I need you to know is this: did you read or did you just react? That is extremely important, because you want your investing strategy to be informing your portfolio and not the news to be telling you what to invest in. Your goals and what you want to do and how much money rather you're trying to make, that should be determining what you invest in. The news cycle should not be informing you of what you want to invest in and how that plays out. You've got to sit down and say, hey, what is it that I want to do and how should my portfolio be looking based on that? And here is why that could be a problem, why I didn't post anything on Instagram as an instant reaction to what was going on. You've likely already heard that Venezuela is the world's largest proven oil reserve. And I think they hold up to like 17% of the world's largest oil supply. But right now, they are only producing 1% of the world's oil. Now, the issue here is that's a gap, right? You hold 17%, but you're only producing 1%. You have to remember that oil is a supply and demand market. So you can pump out all the oil you want. Like, what happens if they start producing 3%, 4%, 5%? Okay, you flood the market with supply, but ain't no demand, which means prices fall, which means you do not make money as an investor and the companies do not make money. Don't forget that OPEC, right, the oil producing nation cartel, right, it is by definition a cartel. They decide at times to restrict oil supply, to raise prices at times on purpose. If you didn't know that, you might want to be very, very careful before you just jump in to oil stocks. These are things that you do have to pay attention to before you jump into an international conflict, before you jump into oil stocks just because they are in the news. But also, because this is an international conflict, things can be quite unpredictable. And this is not the first time that this has occurred. Let me just give you a quick history lesson. For example, this is one that happened. Tariffs last year, all of last year, were unpredictable. They started off at 100% for certain countries, 39% in the case of Switzerland, then came all the way down. They were all over the map just last year, and we saw how they rocked the stock market around April or so of last year. And then let's also not forget the Russia and Ukraine conflict and how that started to rock the stock market immediately once that started to pop off. These things pop up, people try to invest. Sometimes those bets do work, and other times they absolutely do not. But they can be complex. They can last for a long time. In the case of Russia and Ukraine, we don't know how long this can last or whether or not it is legal, and we are still in it right now to this day. Investing in oil stocks may sound good on paper, but what I really think people are doing is two things. One, they're trying to capitalize and make money on uncertainty. Hey, the market's uncertain. They say they're going to go in and control the country or run the country and take over some of the oil stocks. Let me just go ahead and do that. However, another way to look at it is you can also invest in gold, because when there is uncertainty, but you don't necessarily want to deal with all the complexity that is going on there, gold also hit a new all-time high today and has been doing quite well all of last year. You could go there, and that makes a lot more sense without all of the complexity. So pay attention to gold as an alternative to some of the oil stocks. Another reason why I feel a lot of people are looking to oil right now is because this feels like a simple, easy puzzle piece to make a lot of money in perhaps a little time to make up the gap because you might feel like you are behind. So if you feel like you did everything right, you got a good job, you got a steady income, but you still feel like you're spinning your wheels and not really moving forward, I can help you build a plan to get you real momentum. Go to buildingbread.com/callkev and we can build a plan together. Let's go ahead and continue. This is the question I would ask any client who is coming down or calling me into the office and saying, look, hey, I want to buy an oil stock, and which ones would you recommend right now? My question would be this: what are you expecting when it comes to buying oil stock? I'm not telling you no, I'm just asking what your expectations are for buying stocks. How much money do you think you would make, or how much money would make you happy with buying an oil stock? The end of 2026, you get the returns. It's X percent. What percentage do you expect to make if you're holding this stock through the end of the year? Or you're just trying to do this for a quick play, right? You just want to buy and sell it tomorrow or next week. What is your expectation? What are you trying to do? How does this fit into your strategy? That's the question I have for you. For example, last year, Chevron made 11%. That's solid. That also underperformed the S&P 500. That's number one. Now, this is a brand new year. It's a brand new situation. We will see what it is going to do. Contrast that to TJ Maxx. TJ Maxx was close to 24% last year. Okay? And last year, TJ Maxx was above 24%. One of those was a bit more complex than the other. The point of that is, what you may be doing is saying, look, I am going to choose the most difficult way to find a profit at the very top of the year and risk perhaps making a very expensive potential mistake in a scenario where we do not know what the outcome is going to be. We don't know any outcome when it comes to investing, but you're choosing the most complex route to get there when you have stocks like TJ Maxx, a boring discount store. You got gold, which has done well all of last year and will continue to do well as long as we have these weird, chaotic situations. Those two things are relatively proven. Nothing is a guarantee. Nothing is a guarantee. But those things are relatively proven, and you still obviously have the S&P 500 index funds, and then you have international index funds too. You've got those three options, right? But we're just going to go with oil stocks just because it's in the news today or this week. We'll see what happens the rest of the year. If this starts to fade from the news, is that something that is going to do well for you? Right now, currently, only Chevron is the main company in Venezuela that is operating. If ExxonMobil and others start to move into the region because of this, how long is that even possible or even legal? How long are we going to hold on as a country, as the U.S., going to quote unquote run Venezuela? And wouldn't it take years for them to build up their own infrastructure to make money off of that? Is that going to impact the stock? Yes or no? These are complex questions that you would have to answer before you put your own money on the line, when you just could have taken that same money and put it in gold, put it in an index fund, put it in something like TJ Maxx or any of those other options that I had mentioned earlier. I'm going to put it to you in a sports analogy. It is the Super Bowl. You have the ball and you are on the goal line. You have the best running back in the league that you can just turn around and hand the ball off to and win the game. Or you can pass the ball. Buying an oil stock is risking passing the ball and getting it intercepted and losing the Super Bowl because of it. That is what investing in an oil stock is. It could work, it might work, but you are taking a major risk in doing so. You are taking a major risk in being the Seattle Seahawks losing to the Patriots.
Play clock at 5. Pass is intercepted at the goal line by Malcolm Butler.
By investing in oil right now, that is the risk. Could it work? Yes, it could. It is possible. Notice I didn't say you were absolutely going to lose money. I didn't say it was dumb. I just said you are taking an overly complex risk by doing so, and you saw what happened in that Super Bowl. But what I can tell you is there is an easier path by just running the ball. by just perhaps investing in gold, by just perhaps investing in the simpler stocks that have already proven to beat many of those oil stocks and have done so for more than a year, that might be the easier thing. Because again, what you need to do is say, hey, what is my strategy? What stocks fit with my strategy? Not, oh, this thing just happened today, let me just go ahead and grab that. What happens when this is no longer in the news? Those are the things that you need to sit down and consider. And if you need somebody to sit down and say, hey, look, can you double check my strategy? Can you make sure that my investments are in the right place? I can help you to do that. But in the meantime, if you want to learn more about investing in stocks that might be better for you, you can check out these videos right here.